You're listening to the Unlocking Africa podcast.
I have been working in the agriculture and food security space all through my career. Before we came up with this model, we interviewed and spoke to a lot of agribusinesses based on our work in the ecosystem. And we found out that for many of the agribusinesses, some of them have not accessed financing from the bank. When technical assistants kick in to do pre-investment assessment, we are able to advise the business, and we're also able to spot where the gaps are. The partnership, we can achieve the scale and achieve the leverage and also achieve the impact. That's how we think about it.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to another episode of the Unlocking Africa podcast, where we explore the ideas, innovations, and strategies that are unlocking Africa's economic potential. Joining me today is Dara Adekunle, Managing Partner and CEO at FARMTIES Capital, an investment firm focused on financing export-oriented African agribusinesses and strengthening Africa's role in global trade. What makes FARMTIES interesting is that they are tackling one of the biggest and least understood bottlenecks in Africa's growth, which is trade finance, especially for agricultural SMEs trying to access markets in North America and Europe. Dara, welcome to the Unlocking Africa podcast. How are you?
I'm doing well. Thank you for inviting me, and I'm happy to be here.
As always, I like to start at the beginning because we know FARMTIES didn't appear overnight. It came from a very real, very practical problem in Africa's trade and investment ecosystem. So if you can introduce yourself and maybe just segue into how your experience maybe came to the realization that what you're trying to provide at FARMTIES was needed.
Thank you for the wonderful question. So I have been working in the agriculture and food security space all through my career. And so it means I've worked on every aspect of the value chain. I started off as a farmer. So it's more like I'm an engineer turned farmer because I have an engineering background. And from farmer, I had the opportunity to also do my own sort of processing, and also worked a lot around aggregation and providing, access to markets for smallholder farmers. And one of the challenges that I also faced as an entrepreneur was always access to capital. And it wasn't just my problem. It was more like the problem of every other agribusiness, enterprise working in Nigeria, and which is also the problem many African businesses face. And we all know the reasons. It's always they're operating businesses that are, asset light, and they require a lot of cash flow to enable operations, and the collateral requirements from traditional financial institutions are always, on the high side and very difficult to meet. And then you have to more resort to your family and friends to help you maybe fulfill an aggregation for maybe a large manufacturing firm or even an aggregation for export. And so those lived experiences and also interacting with a lot of stakeholders who are actively working in the ecosystem made the gap really evident. And what we're seeing is it's a big gap. It's a huge trade finance gap, and not only FARMTIES can even solve it. And so we just want to be part of the solution. And this is, what has made us, evolve into what we are doing, where we are now built a company that is focused around investment, is focused around trade facilitation, access to markets, and access to finance for agricultural SMEs that are, processing and exporting from the continent.
You touched on the gap being evident. What gap did you see that convinced you that Africa's agribusiness sector needed a new financing model?
Yes. I would like to tell this story. So I remember some years ago, I visited a factory that processes cashew kernels and had a demand from North America. And I saw the contracts, I saw the factory, and it wasn't functional at the point in time. which was the harvest season, meaning that should be the peak where the factory is fully operational, women sorting, people working, but the factory was not functioning. And so the question I asked was, what's the problem? Why is your factory not functioning at this time? And the feedback I got was, okay, I started processing, a loan facility from a bank, and I haven't gotten the approval. It's taking me several months, and I'm not able to process to meet the demand that I have. That's one business out of so many others. And so what I realized was that if we keep, structuring agribusinesses to suit, traditional ways of financing, which are more tailored to maybe like oil and gas and other types of, businesses in the segment, you are leaving agriculture out. Agriculture is a times and seasons business. And when you're financing any aspect of the value chain, you need to consider the times and the seasons. So the time to plant, the time to harvest, especially the time to harvest, which is where a lot of post-harvest losses occur. And the question we always ask at FARMTIES is, if you increase productivity and then you're experiencing 30 to 50% loss because of poor post-harvest practices or not even access to markets for the farmers, then why are you really increasing productivity? Why don't we focus on this missing segment of people who require working capital to buy as much produce they can buy during the harvest process and, sell to both the local market and the international market? And so it was more of a mismatch in the type of financing available. And we all know the huge collateral requirement that is always requested from some of these agri-SMEs. It's almost like you need to provide property or a collateral requirement that you may not even be able to fulfill. And that's what we realized, that many of these businesses, they grow. So it's more like they start from somewhere and they grow. And even if they grow to become $1 million, $2 million company, their working capital needs will always be more than the assets that they have, because they're more like an industry now that is turning out a lot of processed products and require lots of money to be able to buy raw materials and enable them to do so. So that's what we see. It's more like the capital mismatch. And it's not just peculiar to agribusinesses. Mostly a lot of small businesses working across Africa, there's always a mismatch in the type of financing available. So options will either be maybe VC funds, traditional financial institutions, or alternative forms of finance. And for me, I'm a promoter of alternative financing because we are in an ecosystem. We're in a market that exits are difficult to reach. And so we need to be creative around thinking about how do we exit, or how do we provide more tailored capital to the businesses that we serve. And that's why we thought about financing in a different way for us.
You touched on the funding and capital mismatch. Africa's agriculture sector contributes massively to GDP, yet there's still $100 billion trade finance gap. From where you're sat, what do you perceive as being fundamentally broken in the system today?
So what we've seen that is fundamentally broken is, just like I mentioned, is a lot of capital providers really understanding agriculture and able to provide agribusinesses with the right types of capital. So many of these businesses, they operate on purchase orders, forward contracts, seasonal trade cycles, and many of the financial system will rely on, long balance sheet histories, hard collateral, and sometimes many times rigid loan products. And so this creates the mismatch that many agribusinesses face. In addition to that, we also see that many SMEs are often expected to absorb the FX risk. Sometimes the logistic complexity that they face require them to have more tailored, capital to their operations. And so this gap, even though it's huge, I do think that many financial institutions who actually have the opportunity to play a significant role in bridging that gap need to begin to design products that work for agriculture and work for agribusinesses and even the manufacturing sector in Africa, whether it's through training. I know that some financial institutions have been trained. Some financial institutions need more, capacity to develop products that work for, this segment of businesses. And also there needs to be that shift from just will to do. And so many financial institutions, even those who are mandated to either fund agriculture from their balance sheet, you see there's always that, either they're not meeting the quota or for some reasons they're just, pricing out a lot of businesses that require this opportunity. And so it's a fundamental challenge. The banks available, the Exim banks that are available, there's so much that they can do by themselves. And so one thing I would like to see is more financial products from different forms of providers, tailoring, capital to this segment of businesses to enable them to bridge that gap. I sometimes say, even with the financial institutions working across Africa, I don't think they are enough to even bridge that trade finance gap. So we need more. We need more innovations, and we need more, capital providers looking into this space.
I know from my experience, agriculture is often discussed in Africa, but as a trade professional, I believe trade is where the real scale happens. So what role do you believe export-ready African SMEs can play in driving economic growth on the continent?
They do have a very strong role to play. Agri-SMEs, they sit at the intersection of production, value addition, and also global demand. One thing about food security is that it's not just a goal for African countries, it's a goal for the whole world, because we depend on food imports from everywhere. So no country is entirely self-sufficient. Maybe a few, but many depend on imports. And imports from Africa are beginning to grow. People are beginning to realize that, we can buy cocoa, we can buy cashews, we can buy tea directly from African producers. And so export-oriented African SMEs need to really step up and own this narrative. I think we've relied so much on other markets to do our work. And this is the time, with the shift in, trade and aid over the past year, it's more like the whole world is looking at Africa to step up. And if we have our African SMEs doing all they can to fill this gap, we will see that there are more jobs created on the continent. We'll see that smallholder farmers, have reliable access to markets. We will see reduced, food waste and food loss that usually happens between the farm and the market, because these export-oriented SMEs are processing not just for local demand, but also to meet international, capacity. I do also understand that many challenges a lot of African SMEs face is things around, quality, compliance, and even, diversification of the global market that they currently have. We do see that as an opportunity. And we also note that a lot of times when people think agriculture, they always think maybe just production. So there are a lot of interventions, a lot of investments going on, increasing, productivity, increasing smallholder farmers' income by, empowering them. And for us at FARMTIES, I think for the longest time, we've always said that if we can create markets, if we can create, processors, access to market for smallholder farmers will not be a challenge. It's agribusinesses sit at a very unique place where they are driving a lot of economic value in every aspect of the chain. And so I do believe that the big driver for Africa's economic growth, we need to do more processing on the continent. We can do it, and we need to capture more value on the continent. And that's something that we promote at FARMTIES.
To achieve this, we need the financing mechanisms that you've discussed. But what are some of the biggest misconceptions you believe global investors still have about African agribusiness risk?
One of the biggest misconceptions we've seen is that, African agribusiness, and even Africa in general, is always looked at as, a risky place. And sometimes I think it's location driven. There's some investors that think Africa is too far, and some also think Africa is too risky. And I feel this Africa risk is more of a perception, and that perception needs to be changed. change from so many angles, because from what we've seen, even in countries that are fragile, there are good agribusinesses that are contributing to global, the global supply chain. And so businesses should be looked at for the opportunity at which they present to the global supply chain, beyond just maybe the economic factors and political maybe challenges that it comes up a lot. I think many countries have their own challenges when it comes to either the economy, the political ecosystem and landscape. But if we look beyond that and actually look at how SMEs are still, surviving in fragile states and contributing to global demand, I think that's an opportunity that can be captured. I also think that when we are able to look at the transaction, I like to look at things from a transaction perspective as well. When you look at things from the transaction and also look at a business, especially international trade, we always look at the supplier, but also the buyer's creditworthiness is as important as the supplier's creditworthiness, irrespective of where the buyer is based. So when you look at international trade from the two lenses to say, who is the buyer? If the buyer is in like Canada, Netherlands, or the UK, let's see their creditworthiness. Let's see how they can continue to, service this supply chain arrangement they have with an African business, and let's de-risk it from there. But also we can take that forward to the agribusiness to say, okay, now you have a demand. Can you meet it consistently? And what do you require to meet all this demand? So I do think that, yeah, there is a perception issue. I also feel that the success stories from Africa are not widely told. Because when you look at international multinational companies that have worked in Africa for more than 40, 50 years, we need to tell their success stories. Why haven't they left? Or why are they reconsidering staying longer? And I feel if we can capture that and showcase this success story to the world, a lot of people who are missing Africa right now will run to Africa. And I think the world is already running to Africa. But for those who still hold perception, is you don't want to be left behind, because Africa is where the world will look up to in the next future, and they're already doing that at the moment. So it's a risk. It's mostly, I'll say, perceived risk. The returns from Africa, the opportunities in Africa, you can see them from people who are already doing business here.
If we zoom in and look at FARMTIES itself, because the structure of your fund is very intentional. FARMTIES Fund I is a 50 million profit-sharing trade finance fund. Can you walk us through how this works?
So, it's very intentional. We designed it very intentional, and we are deploying in a way where we own, I would say, not just owning our narrative on how we're deploying capital, but it's also practicing what we preach. We want to be a partner to a growing agribusiness from Africa that is exporting. We want to be a long-term partner. We also don't want to be a partner that is forcing terms on agribusinesses terms that are not suitable to their business model. And so before we came up with this model, we interviewed and spoke to a lot of agribusinesses based on our work in the ecosystem. And we found out that for many of the agribusinesses who are successful in exporting, some of them have not actually accessed financing from the bank. And their turnovers are pretty decent. And so the question is, how did you grow this business from, say, $50,000 to $100 million within a space of 5 years? And the question is always, we had a diaspora partner, or we had an uncle, or we had a family member or a friend that gave us the funding for our first shipment, and then we recycled that shipment and we're able to grow. If you look at successful exporters from Africa, many of them started this way. And so for FARMTIES, the question we always ask is, can we be that friend? Can we be that reliable and trusted business partner that can provide revolving working capital to agribusinesses to fulfill their trade, so that we can measure their growth and we can also measure the impact they are making. And for us, deploying capital that way shows that we come into a business as a form of partnership where we want to share in the upside. We also want to share in the downside. Nobody likes to hear that about sharing in the downside. And so the question for us is how to mitigate the risk. Are there ways and mechanisms where we can de-risk the opportunity for us to come into it in such a way that everyone wins? And that's the way we really look at investing from FARMTIES lens. It's always a partnership, it's always co-creation with the agribusiness. We have to win. And if we're not winning on a particular opportunity, we don't have to leave you guessing. You know why? You know why? Because because you can see it from your cash flow, you can see it from your projections, and you can see the opportunity. And I feel that many African agribusinesses don't have that partner to tell them why they are not financing them. They're just confused. Oh, this bank didn't finance me. But the reason is because your margins are not that great, and there's a lot of risk that you are not even thinking about. Have you thought about reducing your cost of production? That's what FARMTIES will do. We wouldn't leave you guessing, and it's very transparent. And so that's why we really believe in this way of deploying capital. We believe in partnership, we believe in co-creation, and we believe in long-term sustainability of every business that we're supporting.
Fantastic. So you've broken down how FARMTIES differs from traditional private equity or bank lending models in Africa. I know you also focus heavily on working capital tied to confirmed export orders. Why do you believe this is such a powerful but yet overlooked growth lever for African SMEs?
It's we believe it's powerful, and we also believe it's very complementary to other funders out there. Because while other funders are providing their own type of debt or equity instruments, for us, we are providing transaction level, facility that will always be needed by the agribusinesses, irrespective of whether they have accessed equity or accessed debt. And so that makes us partner. That's one. Also, we're looking at the opportunity based on, is there a confirmed export order? If many SMEs cannot pre-finance, inputs or processing, and so that's where many of the deals, will fall apart. Many of the businesses run out of business because of cash flow problems. And that's because of the way trade works. When you make a supply, you're waiting for the buyer to pay. All those time and all those opportunity, they're like gaps that, a partner like FARMTIES can come fill and enable you to continue your business rather than, closing down because of cash flow challenges around and trade. Especially on, production, like the pre-financing where businesses need to buy, process, and sell. You can measure growth. And I think that's something that is really important to us, because we look at what we are doing from an impact lens. Can we build these businesses to scale? Can it be consistent? Can we build credibility such that, we are not over leveraging the business? Can the business pay back to FARMTIES based on their actual trade? And so that's what is important for us, because we always used to say this: if a business has to find out other means to pay us back their money, and it's not from the underlying business that they are carrying, then it kind of makes us reflect and think whether we're actually giving the business the right kind of capital. We really care. We really care about how the business pays us back. And that's why we're staying on the transaction, and we're staying as partners to the business. And also, we don't make businesses miss an opportunity. What's often missed is that the type of financing doesn't just unlock one transaction, it actually enables repeatability. And so it turns the SMEs to reliable export orders. I know you probably would have heard this saying. People always say when Walmart or Tesco or Loblaws, one of the big, businesses in the diaspora would knock on an African's door to say, I need you to supply me cashew kernels from Africa. It's always an opportunity and maybe a cost. And then the opportunity is that You have a big buyer, it's Walmart. And maybe the cost is then who's going to be your financing partner to fulfill that order. And so for us is, can we reduce the costs and make it into a blessing where if Walmart or Tesco knocks on an African's door, they won't say, I can't do this because I don't have a financial partner. And this is the opportunity that we see, because Africa has that big opportunity to play in the global market. It's not rocket science. Other people from Asia and other parts of the world are doing so. And so when the opportunity comes to Africa, we shouldn't miss out from it. And that's the way we look at things, at FARMTIES. And that's why we think this is a powerful and maybe sometimes overlooked, opportunity for a lot of African SMEs.
So from a FARMTIES perspective, what would you say makes an agribusiness truly investment ready?
Yeah, that's a good question. It comes up a lot. Some things are basic. We want to see a business that is operationally disciplined. Investment ready doesn't always mean the business is perfect. It's just that they have put in operational controls, financial transparency around, not just their operations, but also the buying arrangements that they have. And so for us, we have seen that many SMEs are trained, which is good, trained on improving their operational, performance needs. Many others are not trained, but some things are basic. Is your business registered? Do you keep your records properly? Do you have your audited accounts over the past years? What is your governance structure? We are trying to work with businesses that can compete globally. So some things are really basic. And so investment ready is having these, systems in place where you can compete globally. It's the same thing that will be asked for a business as is in any other part of the world. So these are more like minimum requirements. While you have that, because it is trade for us, it's beyond just general operations, because you can look good and even maybe look good on paper, but then maybe you don't have that capacity to fulfill a trade or even understand the clear unit economics of financing a trade. And so you probably will see even the best of businesses getting their goods rejected, or even the good businesses not able to consistently meet a demand. And so those are the areas where trade readiness is also what is important to us. So investment readiness is one thing, trade readiness is the other thing. And so one thing we would want founders to do is, beyond the vision, is also the systems. How are you ensuring your documentations are good? You're moving from informal to formal controls. You have good financial reporting. You can track your cash flow, and you can also, track your either track how you are keeping up with existing debt, or even just managing your buyer relationships, and also things around logistics. Like for us at FARMTIES, we really look beyond just investment readiness. We really want to see investment readiness and trade readiness, and all of these are tied to operational discipline. And one thing and why this is also important for us is that we also have like a technical assistance, support and even facility that supports businesses around these areas. And many businesses over this year, it's been so interesting. Many businesses who are actually doing huge volumes have expressed that need to say, I started this business alone. Maybe now I have like 20 staff. I'm doing this $1 million in annual revenue. I actually need help to structure my business properly so that I can compete internationally. And that's why we do have a team and that looks into the technical assistance needs for these businesses to see which areas can they improve. Some businesses want to embrace zero waste in their factories. They want to use efficient, processing, efficient ways of reducing the energy used in their processing facilities. That's actually an opportunity to look into the operation and connect them to an expert that can help them think through that solution rather than figuring out everything all by themselves. And so investment readiness is really important for agribusinesses, especially agribusinesses doing exports. Is both, investment readiness, but also trade readiness, because that's what makes you to compete globally. And that's how we look at things.
You briefly touched on the technical assistance that you provide. I know that FARMTIES uses blended finance and technical assistance as part of its strategy. How does this actually reduce risk in practice?
Yeah, technical assistance specifically in practice, when it is deployed, it actually helps with reducing risk around like reporting, compliance, operational execution. These are things that you can easily like spot quickly. And that also helps us as investors too, because when technical assistants kick in to do pre-investment, assessment, we are able to even advise the business, and we're also able to spot, where the gaps are. We are obviously we're promoters of blended finance in agriculture. We're always in different conversations that, speak around blended finance. And it's because we do also believe that catalytic capital can absorb some of the risk that's inherent in agriculture. What makes it interesting is some funds or even some investors may even be deploying commercial capital to trade without even catalytic capital. And that's why they ask for all the requirements that they ask for, because they're trying to, reduce their risk as much as possible. But with blended finance, you can be able to make the impact that you want. If you can pull in resources, get the government involved, get family offices, get, DFIs, if they can come into this, kind of opportunity, not just peculiar to even FARMTIES as an organization, but many, fund opportunities across the continent, it can actually help to reduce the risk in practice. And technical assistance is also, one very effective way to do that.
Keeping on the theme of risk, you've built multiple layers of risk mitigation at fund, structure, and company level. What lessons should other Africa-focused fund managers take from this?
One thing I think is important is, first of all, understanding your perception of risk or the inherent risk that you're trying to avoid. And so other fund managers on the continent, like I mentioned earlier, making this blended finance work for African SMEs. When you think through, and that's why sometimes you see the debate around blended finance, you see debate around impact investing. There's always that, mismatch to say, okay, if you want to be commercial, be commercial. If you want to be impact and then you're commercial, it means that what are you really doing? But then again, impact investing in itself is not, it's just like any other investing from an impact lens. And so when you're looking at risk, it's more like, how do I ensure that from the fund, you're able to de-risk, the fund on that level. Also from at the investee level, how are you able to de-risk? What are your mechanism? What are you asking for? Too many times, many managers try to price risk without redesigning the structures. And so how these deals are built and monitored are also, very important, not just the return, that you're expecting to get. And I feel that that's actually an opportunity that a lot of African funds can really look into, especially in designing, the fund to cater to the need of the business. If you just design a fund that is not tailored, and just go back to tailored financing, if you design a fund that is not tailored to the segment of businesses that you're trying to play, then you have a fund that, even maybe you have a fund that is not deployed because there's a mismatch. And I think a lot of funders tend to find themselves into that challenge where they've developed their fund, they have funding available, but then there's a mismatch because when you bring out the criteria for SMEs as well, like, okay, what type of SMEs do you really want to support? And so there's always that, battle. And I think, looking at this holistically from the design, perspective helps. And I think this is something that even, we're learning outside, we're learning as FARMTIES, but because we've also been in a lot of conversation around redesigning fund structures, innovative financing, alternative exits, that has also helped us to really reflect and think through solutions that are tailored to the segment of the kind of businesses that we want to support. And we think this is something other fund managers can look into, irrespective of the, sector that they work in, be it entertainment, tech, agribusiness, travel and tourism, oil and gas, whatever the case may be. I feel this is something that many funders should look into.
One thing that stands out for me is that impact isn't just a side conversation. It's actually embedded in your business model. You intentionally prioritize women-led and inclusive value chains. What would you say the commercial case for gender lens investing in agribusiness is?
That's a good question, and I really like that question. I think that women play a huge role in agri-businesses, especially in processing. And for us, I think that's where we want to really ensure that value goes to women, especially women who play a huge role and are often not seen in the entire value chain. When you look at any typical processing activity, I've worked in the space all my career. When you see sorting, cleaning, drying, that's where you see women play. And most of the time is, okay, how much income are they able to earn from doing those activities? And that's why we are really focused on businesses that have an integrated chain, where they're not just traders. If they're just traders, they don't really care about who is playing in the space. But with business who have that, integrated way of approach in doing their business, they're connected to smallholder farmers, employing women. We are able to, trace the impact. But not just that. Historically, women are known to, have lower defaults when you come to, lending. I know there's a whole research around even women, led funds delivering a lot of value. It's more like I'm more like elevating that, known research that I think people tend to ignore. Even practically, when I had to provide input to smallholder farmers, the most successful cohort of people were the women who were received inputs, because they paid back on time, paid back on quality, and and it was just like, I think we know this, and I feel it's time for the world to accept the fact that investing in a woman is the lowest risk you can ever get, because they put in all the safeguards to ensure that money gets back to you. And research has shown it. And so if there is research to back some of these findings, it only makes sense to be more deliberate around investing in women, or even investing in enterprises that have a lot of women participation. I know sometimes, especially when you begin to look at the numbers, you just see that, okay, what's the mix of people who own this company? Sometimes they're male-led, but then a lot of women in the management, which is good. Women-led, perfect. But what we do see in agribusiness and agri-processing is that there is a lot of it's a lot of women playing across the value chain. And so for us, for any trade that we finance, we are almost, rest assured that it's going to land to a woman who is in the value chain because of where they work. And that's very important. And that's also very important for us. We're beyond the fact that we think like commercial people. We like to see ourselves as those like a commercial investor with an impact lens. We really care about the impact, and we care about those metrics around women participation, increase in jobs, sustainability, and improved, livelihoods of smallholder farmers in the chain. That's very important for us.
I like that you mentioned in terms of you're still very much interested in the commercial aspect of it, which is important, especially when trying to bring on investors into a fund. I know FARMTIES is targeting $250 million in trade facilitated and thousands of jobs created. How do you ensure impact scales alongside capital, not after it?
Yeah, interesting question. I like to, first of all, start with the gap we're trying to fill. So if you look at $100 billion gap, and we trying to participate in trades that are cumulatively of $250 million and maybe above up to $1 million, $1 billion. It's something we're not doing all by ourselves, right? So it means that we're we're participatory in an ecosystem that is enabling the trade. And so that's something that we look out for. We're not trying to do this alone. With our team, with our resources, with what we're trying to put together, we also understand the point of leverage. We also understand the importance of recycling capital. We also understand the importance of co-investing. And so with that, we're able to increase, the impact. I would say sometimes it looks like it's easy to say than it's easy to do, but it's actually very possible to do, because by the time you are collaborating, you're partnering, you're not doing this alone. You're also even complementing other funds and commercial institutions like the traditional banks and even DFIs and everyone playing in the space. You see that we can achieve that volume, but we can also achieve that level of impact, because it just means that it's not only our capital or our resources that is doing the work, it is actually leveraged. And that's the way we look at things. It's a huge gap. And and we believe that with collaborations, with partnership, we can achieve the scale and achieve the leverage and also achieve the impact. That's how we think about it.
So if we continue to look at the bigger picture, if policymakers across Africa are listening, what's one trade or regulatory shift that you believe would dramatically accelerate companies like FARMTIES and the SMEs that you support?
One policy shift I'll really encourage African governments to do is to go into a lot of trade agreements with international organizations. And if you have trade agreements that are dormant, maybe it's time to wake it up. I know we do have the African, AFCTA, which is being promoted, has a lot of support. Policy-wise, there's a lot of work to make that, operational. We start by easy things as visa access within African countries, the road networks, the infrastructure, the airport. I know that's something to deal with, not just at the policy level, but even at infrastructure level at different governments. And it's something to pay attention to if you want to see a lot of intra-Africa trade. But even international trade, we need to be in those international agreements. And I know that some African countries have signed several trade agreements with, other countries. Some trade agreements are just there as paper. They need to be activated. And I feel that's what policy should really look into. African governments need to, we've moved from aid. And we always used to say trade, not aid. This is the time for trade. And so we need to ensure that the trade policies and trade agreements we're having is putting Africa at the center stage and having a good advantage for Africa in playing in the global market space, especially around food and agribusiness in general.
So if we shift from the policymakers and the actual SMEs and founders themselves, what's one mindset shift African agribusiness founders must commit to if they want to be truly investment ready?
Very good question. The one mind shift will be that African agribusinesses should think big and stop playing at the lowest form of value creation. That's something I'm going to say. And FARMTIES, we really promote value addition. I know we've traded commodities since 1960 and 1950. This is 2025. I think we need to do more. We need to show that the world can have access to made in African products that can get on their shelves, that can get into homes that are internationally competitive. And co-manufacturing can happen where a company in the diaspora, a company in US, Canada can actually come and have their own factory in Africa and operate successfully. That's what we want to see. And African companies that are currently adding value and processing, we know it is tough. And that's why people like us are looking at you and advocating for you. But don't give up. Don't play at the lowest form of value. Think big, because when Walmart calls, you cannot afford to fail.
I agree 100%. So looking ahead to the next 5 to 10 years, what role do you believe Africa can play in global food security?
Africa is already playing a huge role in global food security. And so I believe over the next 5 to 10 years, there will be that increased participation. That's what I see, especially, I would still say, especially around value-added products from Africa. We already produce some of the top products and commodities: shea butter, cashew kernels, cocoa, coffee. We are already huge players. We need to really take that space, own it, and do more with it, because the world really is looking forward to Africa. We have the land, we have the people, we have the intelligence too, we have the knowledge. Let us do what we need to do to be able to fill that gap. And because if we don't, it's not difficult for other regions to start growing these things. It's not that complicated it's just a matter of new technologies to improve all of this. So if the world is relying on Africa, we need to continue to fill that gap and continue to play in global food security like we've always played, but also play at a value-added perspective.
And I guess to add to that, what financing changes do you believe need to happen to unlock that future?
Oh, we do need to see blended finance working for agribusiness in a much more sustainable way. We need catalytic funders to play a huge role, not just providing catalytic capital and feeling good about it, but actually tracing the impact of catalytic capital on the real economies on the ground. I think that's very important. Tailored financing cannot be overemphasized. We need capital that works for Africa. We need capital that works for agribusiness SMEs. And the earlier we begin to think about, alternative financing for Africa, the better. It's not like it's rocket science. There are so many examples to draw from. We can begin to action on them and begin to tailor them to the ecosystem.
Fantastic. Dara, one last question. It's different to all the other questions, but it's one that I ask each and every guest.
Quote of the week.
As people, we often have quotes, mantras, African proverbs, or affirmations that keep us going when times are good or when times are challenging. Do you have one that you can share with us today?
Yeah, the one that comes to mind quickly is one that says, the moment you decide to do something, the whole world conspires to make it happen.
Interesting. I like that. Thank you for sharing with us. Dara, we've come to the end of today's great conversation. I think for me, what really stands out is FARMTIES Capital isn't just about financing agribusiness. It's also quietly building that trade finance channels that allows African agribusinesses to participate meaningfully in not just global, but also local and regional supply chains and markets. So keep up the great work, and I'm looking forward to seeing how things develop and evolve over the coming months and years.
Thank you so much for having me. I had a great time having this conversation, and thank you for the work that you're doing.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.